It is July the 29th, 2016. End of the month dynamics, I think, will take precedence today. I think that we're looking for trading range markets with an upward bias in equities. Big number today, GDP, 2.6. Can come in lower than forecast. The deflator at 1.8 will probably be right there. Employment cost index up 0.6%. That one can come in lower given the current employment situation. Chicago PMI at 54. Maybe a little lower. Consumer sentiment at 90.6. Could come in lower. And Baker Hughes rig count for North America 564 could come in higher. Focus will be GDP. The Atlanta Fed's estimate for GDP was 1.8 for the second quarter. Second will be Chicago PMI, and third will be consumer sentiment. So 1, 2, 3. Japan's move disappointed last night. They kept their QE program as is. They did not change interest rates. They did increase their purchases of ETFs from 3.5 trillion to 6 trillion. And Ian, I can't remember if that was for the month or for the year, but they did add a little bit to it. But obviously the world was disappointed. But central banks have figured out that it's talk is cheaper than real money, and they can do it. They do actually a pretty good job of keeping the markets where they want them, with hints and promises of more to come, etc. And then they don't do anything, but there are hints and promises of more to come, and the markets kind of stay right where they are. So they're pretty effective that way. We've got volume here. We've got volume in the overnight session there. We have volume down here in volume. So outside case for a trading range today would be support at 32.08, resistance at 32.24. Inside case will have resistance starting at 18. So we'll play 19s to 23s, sell 1, sell 2, 27 to 31. On the buy side, 8 to 12, then 1 to 5. Looking at the 30-year, again, you guys knew what I was saying. 28 to the buck. Resistance 1, we're there right now. So 3 to 7, sell 1. 15 to 19, sell 2. On the buy side, 16 to 20, first little band of support right here. Buy 1, 9 to 13. Then 29 to 01 for buy 2. Stock market stays contained. It doesn't explode to the upside. I believe we'll look at a trading range today in treasuries. If the stock market really gets going with a lot of buying momentum, we could be to the downside. The inverse relationship generally rules, not always. Okay, gold, we did pretty well yesterday selling the 50 area. We also said we liked the 35-37 area. We got down to 35-37 overnight, so buy 1, 35-37, buy 2, 30 to 32. On the sell side, 44-46, picking up the top of value right here, sell 1, 49 to 51, sell 2. Dollars off versus the yen and the euro. The euro is pointed higher this morning. We're right in this high volume area right here. So can we get stops above 50? They're within reach, so we'll make a play for that. So 45 to 55, sell 1. 75, sell 2. Not much really changed overnight if you think about what Japan did. 111 even is pretty far away. We've got some support in that 10 to 20 area. So I hate doing that. It's right here in the, so 15, so 10 to 20 by 1, 90 to 111 even by 2. I don't think a lot. I mean, Japan didn't do much when you get right down to it, so maybe a little higher off that, get some stops, and come back into the trading range. Crude lower overnight. So 6 trillion yen per year. Thanks, Charles. I always see that trillion on the yen, and it kind of throws me. That's just a big number, but it's been that way from day one. It's just a number that I have a hard time computing. Okay, combining the distributions. Go to the long sign of letters. Left click. We were really heavy. We wanted to sell yesterday. We were hoping to sell 25s to 50s. The market stopped at 20. We were really aggressive on our sell side, but that last rotate up in M period hell, and we are lower this morning. Doing a London split, we're still got volume moving lower, and you can see volume in the bottom half of the distribution. So I think we're headed for stops below 40. First buy 50 plus or minus 1, not 1, plus or minus some, and then 39.75, 40 for buy 2. 40 into the quarter, into the month, might get some profit taking there. So 41 and a quarter, might take 90s to get in. 41.50, 41.75 for sell 2. We've been playing for stops below 40. Still are. Got a pretty good chance of getting them today. $40.50 is a round number that could hold. Then if that comes out, stops below 40. Okay, the E-mini last month, the E-mini closed at I think 2094. So any close above 2094 is going to make every money manager out there that's long equities happy. Their compensation is intact for one more month. So we've got resistance at 65, give or take. And then at 70 to 75. Could make I don't think we have enough going right now to break out and make new highs. But you can see right here that the selling starts at 67. And we're at 61.75 right now. So first sell will be 64, 67. Like to get it done at 67 to 70. Second sell will be 70 to 72. Going to play for a trading range today with an up bias. On the buy side, while we'd like to buy 55s to 57s, don't think we can get in. So they make us pay up early. 58 to 60 buy 1. 54, 56 buy 2. GDP plus 2.6. Deflator plus 1.8. Number one focus. Atlanta Fed came in for GDP for the second quarter at 1.8. They use the Atlanta Fed for forecasting when it's going to be. That would be the final number for the second quarter GDP from the Atlanta Fed. We'll see how close it is. Employment cost index up 0.6. That number could come in lower. Economy's not that strong. Chicago PMI at 54 could come in lower due to the automobile softness in the automobile sector. Consumer sentiment 90.6. Now the stock market was higher. It was higher for consumer confidence. And consumer confidence came in lower, so that number could come in lower. And then Baker Hughes rig count at 564 could come in higher. Probably going to see some of those rigs going idle again. So 1, Chicago PMI, 2, consumer sentiment, number 3 will be the news focus. So look for a trading range with an upward bias today. Like the long side better. Selling really starts at 67 and higher. Buying starts at 58 and lower. Back with you in a bit. It's going to take a while to get everything up and posted.